Hello, everyone, and thank you for joining me. Here at the Business Analytics Show, I pick hot publicly traded stocks and break down its strengths, weaknesses, potential threats, and opportunities. From there, I will analyze key performance indicators and make predictions for the future of the firm. Today on the chopping block, we have the tech behemoth NVIDIA. Valued currently at $4.3 trillion, NVIDIA has become the hottest stock on the market due to its superior GPU, graphic processing unit, technology. This technology was originally developed for video game graphics, but from the company's inception in the Silicon Valley Denny's, the stock grew slowly over time due to its niche market, till its recent adoption in the AI space where the useful GPU tech had a massive head start on potential competitors like Intel. Now, let's analyze potential forces that could affect the company's dominance in the AI market moving forward. First, we should look at competitive rivals. Currently, there is no one in the marketplace that can compete with NVIDIA's GPU tech, but that does not mean that there are not other big tech companies are just sitting idly by waiting for NVIDIA to deliver their allotment of chips. Companies like AMD, Advanced Micro Devices, Amazon, Google, and Meta are pouring the resources into developing this technology in-house to avoid having to pay a premium for NVIDIA GPUs. NVIDIA did the heavy lifting and has a head start on its competitors, but this lead can be shrunk with lots of resources and a few big breaks. Rivals don't need to beat NVIDIA. They just need to develop a similar product at lower costs, justifying a substitution. Furthermore, we should look at the potential of new entrants in the industry. Last year, we saw this play out in real time with the launch of DeepSeek AI. This led NVIDIA to take a $590 billion haircut. This strong AI model was allegedly funded on a $6 million budget and questioned the forecasted need for vast amounts of AI GPUs in the future. This highlighted the sensitivity to the AI market. Not only did NVIDIA have to worry about their own competitors, now they had to worry about their customers' competitors. Next, we should look at the supplier power. Currently, NVIDIA GPU runs on Taiwan Semiconductor Manufacturing Company TSMC chips. With this being the only source of NVIDIA's chips and the threat from China seeking to regain control over the country makes NVIDIA vulnerable to the supply of its precious chips. Fortunately, TSMC has begun construction of a chip manufacturing site in Phoenix, Arizona. This $12 billion investment should come online sometime by 2027. Once online, the domestic source of chips will strengthen NVIDIA's position in the market. Additionally, it is important to consider customer buying power. NVIDIA has grown substantially from its original customer base of PC gamers who built their own rigs to the tech giants that are their customers today. A large majority of the business is from the Mag 7, of which NVIDIA is one. Mag 7 consists of tech giants like Google, Amazon, Meta, Tesla, and of course NVIDIA. All of their greatest competitors are their customers, but each tech giant is trying to develop their own tech to cut costs of their products and services. This is an area that we'll watch closely moving forward, and any announcements that 6 of the Mag 7 will not be using NVIDIA chips will send NVIDIA's share price plummeting. However, the other 6 have to consider switching costs when ultimately making this decision to move away from NVIDIA chips. Lastly, this leads to the threat of substitutes. As we touched on earlier, this threat is not limited to the threat of other GPU suppliers. This threat could also come from NVIDIA's customers being under threat. If customers of their customers' customers have the ability to switch with low switching costs, the demand will fall quickly. And in summary, NVIDIA faces 3 main threats. The threat of substitutes, whether the substitutes to their chips are or substitutes to their customer services. The threat of supply chain failure, with China looming on the horizon over Taiwan, and an attack on Taiwan would shut down production of their most valuable resource, chips. The emergence of worthy competitors from one of the other Mag 7, which all competing for market dominance in the AI world, it is only natural for them to invest in development of their own proprietary chip technology. However, as long as NVIDIA maintains the lead in this market and continues to innovate, they will have a secure market dominance for the foreseeable future. NVIDIA is currently trading at $176.60 per share and predict even stronger earnings in the future to lead to a stock price of approximately $220 this time next year. This would be 25% growth of the company's current share price. Thank you again for watching my video. Don't forget to like and subscribe. And remember, investing is not without risk. This video is for entertainment purposes only. Invest wisely. Thank you. Bye-bye.